Let the insanity begin. Welcome, it's Bubba's Daily Update. Bubba here. What's going on, everybody? Well, I don't know. I tell you, I've seen things over the years, and as I said earlier, let the insanity begin. As everybody gushes over this tax plan, the pundits are going crazy and talking about the Dow going to $1 billion, and of course, every advisor out there want to buy more. Just a sign of something that may not work out too well for everybody. I think this is a very interesting and unique process we're seeing here. Markets are already up, I don't know, 72 up days since Donald Trump's been elected president, and the markets are up since the actual bottoms, I don't know, 200 and something percent. No 3% sell-off in the last 245 days. No 1% sell-off in the last 150 days. Are we losing? Are we lost our minds totally? It's amazing what's going on. So today, Russell came back a little bit, but not anywhere near what it lost yesterday. Dow made a new record high. And of course, the funny thing about the Dow making a high is they're gushing about that today. And I go, well, that's usually not a great sign. The S&P and the S&P, Nasdaq, and Russell are more important than the Dow. The Dow is more of a safety index, big heavy stocks that are, big blue chippers. They're not where you're going for risk, okay? But at the end of the day, all right, Nasdaq was down, S&P was up a little bit, Dow made a new record, Russell's up a little bit. No big deal, okay? Again, it's not like the market's going to assume. This is purely, it looks to me like it's a buy the rumor, sell the news. Now we'll see what happens. We've got the jobs number tomorrow, so we don't know what that's going to bring us. I'm sure it'll be a big number, but again, it should be expected. We've got a new Fed chair, which we said yesterday, Powell was officially named. Okay, so we've got another Ben Bernanke, Janet Yellen lookalike in the Fed chair job. Okay, so what are we gonna do? In the meantime, oil took off late in the day. Bonds were higher. Not a good sign. That means rates are falling again. But I think this is just temporary. I'd be a seller of the bonds here. You look at the euro currency rally. The British pound got creamed. The dollar was flat. All right, all things that don't really mean anything. There's no real signals here. All right, gold flat, but at the end of the day, all right, you take a look around. And yesterday we said, what did we say? Sell cattle, sell hogs. Both down, both got clobbered today, which is interesting. And buy grains. Grains were higher again today. So now we're seeing maybe some things start to take shape. And of course, we'd still be a seller of cattle and hogs. We think they're going much lower from here. We still looking to be a buyer of the grain markets. Stock markets, we're looking for a spot to actually take a stab from the short side. Again, you cannot continue to borrow your way out of debt. You cannot continue to try to make this facade of what we think is a strong economy, because it's really not. Now, again, maybe the tax plan will be good. I'm not so sure. Again, I can only react to what the markets tell me they think. And so far, they've priced in, and they think they've priced in perfection already. So they did not exactly explode on the news. And in fact, at certain points on, they were trying to sell off. Now, again, I'm not saying we're not going to go a little bit higher. I can't say for sure. But I would say longer term, we're looking for a little bit of a correction. And the facts of the matter is a correction would be healthy. But if you're looking around at just certain different areas, there's not a lot going on. That's the more important thing to think about. Volatility continues to fall. I'm sure it's going to probably test the all-time lows of, the print low is 884 in the VIX, the closing low is like 901 or something like that. But overall, the markets don't look tremendous here. It's not like you got to jump in. I mean, you really want to jump in at valuations that were from 1929? I mean, I think that number that year strikes a note with many of you. At the end of the day, okay, we'll see what the markets do. The markets are not telling us that they're all so totally enthused with this. If you look over the last 2 days, the Russell's a net loser. Now, that would be the one that would most be affected by these tax cuts. Now, again, are they good? It's hard to say yet. I haven't really been able to decipher everything. I'm sure they're going to be beneficial. But again, we need a lot of beneficial things to help make this economy grow. We don't have true growth. They can talk about that 3% GDP. Let's see what it really looks like coming down the road. At the end of the day, the markets look very, very top heavy. They look like they're ready. They're searching for a reason to go down. That's all I can tell you. I've seen this movie before. I can't tell you when, but I'm telling you, you can see it in the eyes of the market. They're looking for a reason. They're searching. All right, and that's the issue here. But until they do, you'll continue to see the money pile in, the margin debt increasing, the leverage being taken by people who shouldn't be taking leverage. Just a lot of things signal that something is rotten in Denmark, okay? Now, tomorrow this is the jobs number, and we'll see how the markets react to the jobs. Now, I'm assuming they've priced in, the markets have priced everything in ahead of time. That's how the market, that's the mechanism of the market. It prices forward. So we'll see what it looks like. But again, earnings, I was trying to wait for Apple's earnings, but they're not out yet, so I wanted to get this report out. But at the end of the day, no matter what Apple's earnings are, I would say that no matter where it goes tomorrow, it'll be lower than it is today, okay? Over the next couple of weeks. We've seen a lot of good things happen. We've seen a lot of great attempts by President Trump to make this economy grow. But until we get the sausage makers, the crooks that have to vote on this and get them out of power or get them on the right side, it isn't going to really matter. And that's the real story. Until then, we get debt, debt, and debt. And that is not a good solution to what's happening with this market. So for today, again, we're going to stay relatively conservative. We do like shorts in the beef complex. We like longs in the grains. But until anything really happens, we're going to sit here and kind of be on the sidelines, observing, ready to react to what the market's going to do. Until then, this is Bubba's Daily Update, and make sure you check out myhighschoolinvesting.com. We're looking for a little help. We want to continue to educate our students. We do have 300 high schools we're in now. We're trying to get to 30,000. And I finance it all by myself right now, so I'm looking for some help. Go to Patreon, patreon.com/Bubba Trading. If you'd like to contribute, that'd be great. I'm going to do a special webinar for all those who qualify for the certain levels that we're trying to achieve. And of course, I'll send you a copy of my autographed copy of my new weekly options book. And also make sure you don't miss the Bubba Show every single day, 2 to 3 Eastern Time, right here at libertytalk.fm. In the meantime, my Dodgers lost. Tough break. I lost 2 in a row. Last 2 games in a row. Tonight, football game. I would play. I don't like it, but if I had to play it, I'd have to take the New York Jets plus a 3.5. Anyways, everybody have a great day. Have a great weekend. We'll see you back here Monday. This is Bubba's Daily Update. Thank you so much. Have a great day, everybody. We'll see you later.